the history of the stock market. Hello and welcome to this video. Today, we're going to explore the fascinating history of the stock market. Let's dive in. The origins of the stock market. The concept of the stock market dates back to the late 15th and early 16th centuries. It all started in Europe, specifically in Belgium. In the city of Bruges, merchants and traders would gather at the Van der Beurs family house to buy and sell goods, debts, and commodities. This informal meeting spot eventually gave rise to the term bourse, which is still used in many countries to refer to stock exchanges. By the early 17th century, the stock market as we know it began to take shape. The Dutch East India Company, established in 1602, was the first company to issue shares to the public. Investors could purchase these shares and receive dividends based on the company's profits. This marked the creation of the Amsterdam Stock Exchange, considered the world's first official stock exchange. The growth of stock exchanges. After the success of the Amsterdam Stock Exchange, other countries adopted similar systems. In 1698, London saw the establishment of its own exchange, the London Stock Exchange. It originally operated in coffee houses where brokers met to trade stocks and commodities. Meanwhile, across the Atlantic, the New York Stock Exchange was founded in 1792. It began with the Buttonwood Agreement, signed by 24 stockbrokers under a buttonwood tree on Wall Street. The NYSE grew rapidly, becoming one of the most influential financial markets in the world. The Industrial Revolution and beyond. The 19th century brought significant changes to the stock market. The Industrial Revolution led to the growth of industries, such as railroads, steel, and oil, creating new investment opportunities. Stock markets became essential for companies seeking capital to fund large-scale projects. During this time, technology also advanced. Telegraphs allowed for faster communication, making it easier for brokers and investors to trade shares. This laid the groundwork for the global interconnectedness of today's markets. The stock market in the 20th century. The 20th century saw both triumphs and challenges for the stock market. The Roaring '20s in the United States were marked by rapid economic growth and a booming stock market. However, this period ended abruptly with the Wall Street crash of 1929, which triggered the Great Depression. Following this, regulations were introduced to stabilize the markets and protect investors. Organizations like the U.S. Securities and Exchange Commission were created to oversee market activities. In the latter half of the century, technological advancements, such as computers and the Internet, revolutionized trading. Electronic trading platforms emerged, making the stock market more accessible to individuals worldwide. The modern stock market. Today, stock markets operate on a global scale. Major exchanges like the NYSE, NASDAQ, London Stock Exchange, and Tokyo Stock Exchange trade trillions of dollars worth of shares every year. The rise of online trading platforms has allowed retail investors to participate in the markets easily. Additionally, financial instruments like index funds, ETFs, and derivatives have expanded the investment landscape. The advent of technologies like blockchain and AI is shaping the future of the stock market, bringing greater efficiency and transparency to trading systems. Conclusion. From its origins in medieval Europe to the high-tech trading floors of today, the stock market has played a pivotal role in global economies. It has empowered businesses to grow and individuals to build wealth, but it has also reminded us of the risks involved in speculation. As we look ahead, the stock market will undoubtedly continue to evolve, reflecting the changes in technology, society, and the global economy. Thank you for watching this video on the history of the stock market.